As crypto has grown more popular, an increasing number of investors are puzzling over their tax obligations. And with digital asset provisions in the new U.S. infrastructure bill, Americans are puzzling further still. Joining us now to discuss is Seth Wilks, head of government relations at software firm Taxbit. Hello there, Seth. All right, so Good morning. What will be different this tax season from previous tax seasons because of this U.S. infrastructure bill?
So I think that we're seeing a lot more exchanges who are kind of voluntarily, giving better information to their users. So a lot of them are preparing gain loss reports. Some are actually filing 1099s with the IRS. But that's the biggest difference with the infrastructure bill, which really will come into play in the next, starting in 2023. I think that for the majority of investors, you'll be able to rely on the 1099 that you'll get from your exchange. Whereas in the current state, you really are having to, the end investor is carrying the burden to do all of that reporting. They're having to aggregate all of their activity across their exchanges and DeFi protocols. And as anybody who's done their taxes in this crypto space knows, it is a complicated practice. And so I think the biggest thing and the biggest lift is actually a benefit to consumers is that you'll be able to rely on these 1099s that will be started to file in tax year 2023.
We also heard this morning that U.S. President Joe Biden signed an executive order for cryptocurrency regulation. Do you see any other policy or legislation on the horizon regarding taxes for crypto that we should be aware of?
Yeah, actually, both in the House and the Senate, we're seeing some activity. So in the House, there's already been a bill introduced, which is the Virtual Currency Tax Fairness Act. And this act basically is creating what they call a de minimis, where, if you're spending your crypto on goods and services, that if you have a gain that's under $200, you would not have to report that gain or pay taxes on it. And so the goal with that bill would be to encourage people to use their crypto for everyday activity, which will bring about more adoption, of course. And then on the Senate side, the bill hasn't been released yet, but we've heard talks that Senator Lummis, who is a huge advocate of the crypto and blockchain industry, is looking to introduce additional language similar to the de minimis bill that would make clear what, give opportunity to save money on everyday purchases, but then also looking at, clarifying what a broker dealer is, which, goes directly to defining who has to report these 1099s. But then also touching on staking, when you should be reporting your income on staking, whether it's when you receive it or when you later dispose of it. So I think there's a lot of really important things that are happening that are, will impact the majority of investors. But also, I firmly believe that regulation is going to be probably the next step of really bringing about major adoption, because it's going to pave the way for a lot of the Wall Street firms who have been sitting on the sidelines waiting for that clarity. So I think it's actually going to be drive another rally.
So Seth, of course, not everybody has accounts just in U.S. exchanges. They're trading on non-U.S. exchanges. What happens in that case? I mean, people still have to file their own tax work, correct? So any advice for them?
Yeah, absolutely. Again, fortunately, even the foreign exchanges, I think, are getting a lot better at providing the information that you need. And so there are a lot of, there are companies like Taxbit that can help you, aggregate your data. We have connections and integrations with over 500 different exchanges here in the U.S. and around the world. And so, again, I think that, number one, like you mentioned, if you have activity in a foreign country or on a foreign exchange as a U.S. citizen, you get taxed on that no matter where it's earned. And so you definitely need to report it.